Ladies and gentlemen, good day, and welcome to the earnings conference call of Divi Laboratories Limited for Q4 and full year FY 2022. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. M. Satish Chaudhary. Thank you, and over to you, sir.
Good afternoon to all of you. I am M. Satish Chaudhary, Company Secretary and Chief Investor Relations Officer of Divi Laboratories Limited. I welcome you all to the earnings call of the company for the quarter and year ended March 31st, 2022. From Divi's Labs, we have with us today Dr. Murali K. Divi, Managing Director, Ms. Nilima Prasad Divi, Whole-Time Director Commercial, Mr. L. Kishore Babu, Chief Financial Officer, and Mr. Venkatesh Perumallu, General Manager, Finance and Accounts. During the day, our board has approved the results for the quarter and year ended March 31st, 2022, and we have released the same to the stock exchanges as well as updated the same in our website. Please note that this conference call is being recorded and a transcript of the same will be made available on the website of the company. Please also note that this audio call conference is a copyright material of Divi Laboratories Limited and cannot be copied, rebroadcasted or attributed in press or media without specific and written consent of the company. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations of future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Divi Labs or its officials does not undertake any obligation to publicly update any forward-looking statement, whether as a result of future events or otherwise. Now I hand over the conference to Dr. Murali K. Divi, Managing Director, for opening remarks. Over to you.
Good afternoon, and thank you everyone for joining us at our Q4 financial year 22 earnings conference. I hope that all of you, your families, and friends are safe. The current situation of COVID-19 is significantly improving, with more people recovering and less hospitalization. We shall appreciate our government bodies who have made tremendous efforts by conducting mass vaccination drives to tackle COVID-19. Divi continues to mitigate the uncertainty tactically and adapt to ever-changing customer requirements and business needs. At this moment, I would like to applaud the dedication of all employees across the organization for achieving a milestone revenue of $1 billion with decent profitability despite the hurdles faced during the pandemic. During the year 2021, apart from creating additional capacities for our pipeline products as well as new capacities for emerging custom synthesis projects, we have also augmented and upgraded our utility infrastructure, which also includes environment management. I would like to inform you that our core investments from the last 2 years on debottlenecking, capacity expansion, and backward integration have started to help us achieve scale and de-risk external supply dependence. Due to the pandemic, there is much more focus on development of oral small molecules for complex therapeutic segments for ease of administration. With high competency on handling a wide range of complex chemistry, as well as rapid commercialization capabilities, Divi has capacities and capabilities to take on the opportunities that lie ahead. Divi, as a responsible pharmaceutical firm, has engaged in a number of CSR activities and has spent about rupees 42 crores during financial year 21-22. Our initiatives are mostly focused in the surrounding communities around our manufacturing units. These include enabling vital services like providing clean drinking water, empowering women, promoting education to children, encouraging skill development, to name a few. I would now ask Nilma Divi to brief on operations and financials. Thank you.
Hello, good afternoon. I welcome everyone to Divi's Laboratories earnings call to discuss the results of our Q4FY22 earnings conference. I hope that each one of you, along with your friends and family, are safe. Supply and cost challenges on procurement side persist, given the geopolitical tensions and lockdown in China due to COVID-19. We are actively monitoring the developments and managing our inventory based on the product criticality. We are making a huge effort in encouraging and developing domestic Indian sources for some of our material requirements. The risks are mitigated to a large extent, thereby minimizing the impact. Shipping costs and timelines continue to increase. Container shortages, rising oil prices, and port congestion are causing trade disruptions across regions. Our logistics team are proactively planning shipments with timely communication to customers, creating a clear supply visibility. Overall, FY22 has been quite a challenging year for the pharma industry as a whole. Supply continuity, despite various disruptions across the supply chain, speaks volumes about our abilities as a reliable supplier. Globally, pharma companies are diversifying their supply networks, focusing on stable supply partners with sustainable business models and strong supply chain control. Divi is ready to capitalize on all these opportunities with ready capacities. Moving on to financial performance for the year 2021-22, I'm happy to state we have achieved a consolidated total revenue of rupees 9,074 crores for the year, reflecting a growth of 29% over the corresponding previous year. Profit before tax for the year amounted to rupees 3,684 crores, a growth of 38%. We earned a profit after tax of rupees 2,960 crores during the year, reflecting a growth of 49%. Our EBITDA margin for the year accounted to 44%. We have been able to contain our material consumption in the range of 34 to 35% based on product mix, despite supply constraints and price volatility. Product mix for generics to custom synthesis is 41% and 59% for the full year. For the quarter ended 31st March 2022, we have achieved a consolidated total revenue of rupees 2,571 crores, reflecting a growth of 42% over the corresponding quarter of the previous year. Profit before tax for the quarter amounted to rupees 1,076 crores, with a growth of 61% year-on-year. We earned a profit after tax of rupees 897 crores during the quarter, reflecting a growth of 78% year-on-year. Exports for the year accounted to 90%. Exports to Europe and America accounted to 77% of our revenue. Constant currency growth for the quarter has been 39%, while for the year it has been 34%. Our nutraceutical business for the quarter amounted to rupees 157 crores and rupees 629 crores for the year. We have capitalized assets worth rupees 172 crores during quarter and rupees 935 crores during the year. We have a capital work in progress of rupees 470 crores. We have a forex gain of rupees 29 crores for the quarter, and for the year the forex gain has been 38 crores. As of 31st March 2022, we have cash on books of rupees 2,804 crores, receivables of rupees 2,570 crores, and inventories of rupees 2,644 crores. Our net worth now is rupees 11,691 crores. Thank you.
Thank you, madam. With this, we would request the moderator to open the lines for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
Yes, thanks for the opportunity and hearty congrats for ending FY22 on a very strong note of 28% sales growth. Just would like to understand, given that we continue to have a steady state sales growth of 13 to 15%, and against that the FY21-22 has been a phenomenal year. So would that growth continue even in FY23?
Well, I used to project every year a 5 to 10% growth year on year on the regular business. It is so dynamic situation right now which we are in, as some of the volumes that came from custom synthesis projects for the innovators is a very unique situation. Lots of dynamic changes in the therapeutic segment. We need to be resilient and quick. We respond to the dynamic changes. Yes, it's a wishful thinking that we would like to maintain, but we also have to look at the reality in the dynamic situation. What I can say is we created capacity with multi-purpose blocks. We are ready to produce volumes in a short notice. This model has speed of delivery. And I think what we are saying is we are fulfilling all contracts. The future is good, but at the same time, with so many things happening in the world on energy, on various fronts, and pandemic situation or pandemic, how it is going to behave in the coming year, not knowing, it's very difficult to give projections at this moment.
On the receivables, there has been sharply increased over past 6 months. If you could explain that.
There are no bad receivables. All receivables are as per the contract, and what is reflecting is the increase in sales that has happened in the fourth quarter. That's what is reflecting.
Got it. And just lastly, if I may, just an update on Kakinada's capex. Has that started off?
We are still waiting for the government clearance to go ahead, though we have all the licenses are received. And as soon as it comes, we will be investing.
Sure. So it's been almost 3 months where documentation is very much in place, but clearance is not coming through.
We are waiting for it, expecting it any day to happen.
All right, so that's all. That's all from me. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Neha from Bank of America. Please go ahead.
So thank you for taking my question. Just wanted to understand what our current capacity utilization is given, the capacity expansion and debottlenecking.
The capacity is around 80% right now, and it varies quarter on quarter, 80-85%. But what I want you to understand that the 15% of capacity available itself is quite large volume to accommodate anywhere from 5 to 10 projects in large volume. It can accommodate. We also have 2 buildings that are ready now to take up new products constructed already.
So the 15% available capacity includes these 2 new buildings?
The 15% doesn't include the 2 new buildings because the equipment has to still go into the 2 new buildings. The buildings that are running right now, we are operating about 85%.
Understood. And sir, given that Kakinada is yet to, start construction and our growth rate, do you see a risk, let's say in FY24-25 where our growth, becomes flattish because of inability to add capacity? Do you run into that risk? Not immediately, but let's say, 18 to 24 months down the line?
See, I think I did mention last time that both Unit 1 and Unit 2, at both sites, we have more than 100 acres of land. At Unit 1, 200 plus acres, and at Unit 2, 150 acres land available with all infrastructure, so that we could start construction of additional buildings immediately without waiting to take very large volume products. Whereas to accommodate 5 to 10 projects, we have the buildings and equipment available right now. I don't see that Kakinada delay has anything to do with we being unable to fulfill any new opportunities that may arise in the coming 2 to 4 years.
Understood. Okay, thank you so much, sir.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, congratulations for the great set of numbers, sir. So there's 3 questions. The first question is on the this antiviral drug opportunity. So if I remember correct, last quarter that you had mentioned you are working on multiple molecules on this front, so which could be considered as a limited period opportunity, but you were mentioning about 1 to 2 year of opportunity on those front. And more to that is that the calendar 22 is likely to see a kind of a robust supply of this antiviral drugs. The global estimate suggests that $32 billion worth of antiviral drugs will be supplied by the 3 players. And if that is the case, then API supply opportunity possibly will be $1 billion plus. So given our execution track record for molnupiravir and all that, so how do you see really this opportunity really panning out throughout calendar 22 for the industry and Divi's particularly in FY23?
Yes, there are multiple opportunities in the for the pandemic, for the COVID-19. As you have seen, the earlier ones, piperware, ivermectin, dexamethasone, chloroquine, acyclovir, remdesivir, several of them, people thought they were highly active, and with the virus changing its course or changing its activity, I think they became inactive or they are being less used. Now you mentioned the newer ones with the 3 big pharmas coming up, another 2 or 3 biopharmas, they are also developing. But what is going to be the billion-dollar question or multi-billion-dollar question is how the pandemic behavior is going to be in the next 3 months, 6 months, 9 months, 1 year. What kind of changes that will take place in the bubble? That is the real issue. What I am saying is we are in touch with every big pharma. Every big pharma knows that if they want 500,000 tons of a antiviral drug. Usually antiviral drugs are, especially the oral ones, are not just 50 milligrams, 100 milligrams. These are in grams per day. So if the product is successful, they need no less than 100 to 1,000 tons or higher. And there are not many companies that could handle such volumes in a very short notice. We are prepared to do that, and we have the equipment, manpower, trained employees, and analytical equipment available to handle all such. We will not lose any opportunities what they come to us from these big farmers. That much I can tell you. Instead of quantifying is difficult, because it's very, very difficult to quantify.
Sure, sir. My second question is on on the new product additions. So if I see, sir, in the recent past or after a meaningful gap, that we have added products like Orlistat, Brilinta, Lacosamide. So these are the kind of DMF filings that we have done. So possibly Lacosamide is not a possibly much larger product compared to our normal product basket what it used to be. And in case of Orlistat and Brilinta, possibly it is the China replacement strategy that you would be looking for. So here, what is the thought process in selecting these three products in the recent past for filing with the US FDA? Some sense will give a better clarity, sir.
It's not just three products. I did mention that there are products going out of patent between 23 and 25, about $20 billion worth. These products are our real targets for making the next generics to give us a good volume. And I think this is one of the growth engine I have mentioned, the future generic opportunities where the processes are developed, samples shipped from pilot studies, and validations are under progress. So we are gearing up for supplies of from between 23 and 25 for these good volume products.
Okay. Just last one question, sir, from my side. Generally, I wanted to have a kind of a big picture view from your side. Let's say, what is our aspiration over next 5 years? Considering these couple of facts, we know that this China replacement is a much bigger opportunity for particularly in the APIs and intermediate space. That is one. Secondly, the old and standing concern of rising cost, which is a key factor for outsourcing of manufacturing activity. So that is becoming more and more serious only. So, and third is that your dominant position in that API and intermediate space for both patented molecule as well as generic one, India's favored position in the current time frame, and also your non-presence in the biologic, which is likely to be one of the key growth drivers. Considering these four factors, what 5-year goal and aspirations that you are having, sir?
Well, it's unlimited.
Great, sir.
Goals are unlimited because sky is the limit. If one wants to dream, I think I always say, dream high, but make sure that your feet are on the ground. I repeat again, they aim high, dream high, but keep the feet on the ground, live in reality. The reality is we are a debt-free company. We have 3,000 crores of cash in the bank, and we have a lot of investments done, already has its capacities, and we are further investing. Now, in the small molecules, I think we are probably one of the first ones to reach $1 billion sales in the small molecules, APIs and intermediates. And how soon we can grow from there to the next level, to become $1 billion company, is one thing. Growing from there in the area where we have chosen, yes, as you said, it's an opportunity, the China replacement, and also there are several new molecules coming out. They're not coming from the big pharmas. They're coming from small biotech companies or small companies which are being funded. So the big pharmas are buying these companies when they are in phase 1, phase 2, and all of a sudden they need capacity to manufacture these products in large volumes. We are evaluating some of those or few of those, and we see great opportunity in the coming 3 to 5 years in those, as big pharmas don't own chemical plants anymore. Though you say that make in Europe, make in US, but there are no big API manufacturing facilities. The maximum they can do is maybe take N-1 and finish the API for the requirement of only in US or for the Europe. At least certain quantum to say that it is made in US or made in Europe. So we are ready to take all the opportunities that are arising from these areas.
Sure, sir. Yeah, thank you, sir. Wish you all the best.
Thank you. The next question is from the line of Jiten Doshi from Anam Asset Management. Please go ahead.
Many congratulations, Dr. Divi. This is an exceptionally good year with very strong results. So my compliments to you and your entire team for achieving this Herculean task in this environment. So it's really heartwarming to see your results and the value that you have created. Sir, I have just one question. If you look out about 4-5 years, where do you believe are the sustainable growth rates and the sustainable margins? I'm not discussing a quarter or 2 or 1 year, the coming year, but let's say if you look at 5 years ahead, where do you see sustainable growth rates and sustainable margins?
It's not an easy question to answer because we are getting the surprises of pandemic which ate 3 years straight in terms of in several issues. Fortunately, Divi did not get impacted. Now looking at the energies, the logistics, I think the main one is the logistics in the world, right from containers to transportation to ports being blocked or being into trouble. I'm not talking about the Ukraine, or I'm not talking about Sri Lanka or China ports. As an overall, I think there is a lot of problem in the transportation also. But as a company making APIs and intermediates, sky's the limit, and we are prepared, we are gearing up with all the capacity requirements. And as you know, the big pharmas are looking at more and more small molecules because it is easy to administer. When the pandemic came, people tried the remdesivir and few other things as injectable, but again, that will limit, to take care of the people. Whereas in the oral form, it is much easier to administer mass of millions of people. So several companies are looking at APIs which are administered orally. These are mostly small molecules, and I think we expect a good growth. I'm glad you said not in the next 1-2 years, 5 years, I think we can expect good growth.
And sir, can I take 40% as your base margin without which you don't want to work?
I won't say it's that I don't want to work. We will work towards it. See, if somebody is getting 20 or 30% on a product, we know what to do a case in, that the continuous improvement in terms of cost saving, improving yield, increasing productivity, recycling solvents, work on atom efficiency, where people think that to make a 10% margin is difficult, I can say that we'll make 50% margin in that product. We're doing that in some of our generics. It's not that it's difficult. We choose a product, we will always choose a product that will grow, that will be required for a long time. We are not looking at immediately whether there is a 30% margin or 60% margin. It doesn't matter to us. We know we can work on it, and we see the opportunity on atom efficiency, and we go after it.
Sure.
This is where we have the 500 people in research who are dedicated to work on.
Sure. So, sir, next 5 years you would be spending what, about 7,000-8,000 crores of capex to accomplish your vision?
The plan is about in the next 2-3 years to spend about 2,000-3,000 crores, but if opportunities require, we don't mind spending 4,000-5,000 crores because we do accumulate our reserves do permit such expansion.
Sure. Sir, wishing you all the very best, and thank you so much for the increased transparency. We highly appreciate that, and wishing you all the very best for the coming year and the years ahead. Thank you very much, Dr.
Thank you.
Thank you. The next question is from Lano Shyam from Goldman Sachs. Please go ahead.
Yeah, good afternoon, and thank you for taking my question. Just the first one on custom versus generic versus nutraceuticals. So just want to understand, and this is again disclosure you put out in the annual report, but I'm just preempting it here. What is the largest product, and what is the concentration, or how much does it contribute to your total sales for fiscal 22?
We don't disclose by product, by company, or by customer. We have been saying from the beginning that custom synthesis, generic, a ratio of anywhere from 40-60% or 60-40%, which keep changing by quarter on quarter or year on year. 40-60, 60-40. Generic and custom synthesis. I think right now it's probably the exports are about 94%, and it happened to be this year it's about custom synthesis about 60% custom synthesis and 40% generic. Again, my wishful thinking is that we maintain 50-50. I've been saying all the time that we want to maintain that.
That's helpful, Dr. Divi. I'm just referring to your fiscal 21 naproxen you've given in your annual report is 20%. I'm not going to push you there, but maybe we will wait for that disclosure in terms of what the largest product is and if it has changed this year versus last year. My second question is, if I were to use the disclosure of 41% generic, which includes nutraceuticals, and 59% for custom for the full year, I'm getting pretty weak numbers for generic API. This is excluding nutraceuticals for the fourth quarter, like a 25% decline. Maybe some of the numbers are rounded, and I appreciate that, but just the decline in the generic API piece over last year, clearly the ratio has moved from 60-40 to 40-60. I get that, but how should we look at it on the go forward? Do we now have either demand visibility or capacity for the new molecules plus the 23 to 25 expiries of patents? How should we look at the generic APIs piece? I'm coming from a point where people are worried about, like many other participants, about sustainability of the revenue momentum. Since we don't know what some of these products are contributing, we're trying to strip off and look at what is the base business, excluding, say, any one-time opportunity that may be there. So that's the context. It's a long question, but I hope you can give us some clarity there.
Well, generic as such is under a lot of price pressures. Generic as such, the customers, because of the economic behavior, either they wanted just in time, or the way they used to sell directly to the stores now is going to the big guys are purchasing in mass volume and local distribution centers. Now, looking at, yes, generics are going to price pressures, not volume pressure. The volumes are still there. We did not lose a customer. We did not lose volumes to anybody else. In fact, the opportunities are coming. They're based on the pandemic, the therapeutic segment demands have changed, some of them. Some of them came down, very few went up. Everybody is looking at just use what is required for the pandemic and just postpone purchases of the generic, whether it is anti-inflammatory or whether it is anti-infectives or painkillers, are all being, I wouldn't say neglected, postponed, less consumed. That's where it starts with the end user. Then it comes to the stores, it comes to the wholesaler, and finally to the formulator who directly buys from us. So the feeling is that once the pandemic settles, I think it will come back to normal as we are seeing now. Many hospitals and many, they have started all therapeutic areas, treatments, surgeries. So I think it will take another 6 months to 1 year to stabilize if the pandemic doesn't change its course again. Now coming back to the 4159 and generic, how Divi is going to get benefited, or are we looking at the future? If you recall our growth engines, what we discussed, we have expanded on the existing generics. The contracts are signed and we don't see any issue with that. And then we have done a lot of increase in capacities for the existing generics where we were playing only a 20% role. Now we have increased that by 60 to 80%, and we signed contracts and they were being implemented slowly because they had earlier contracts signed. They cannot overnight stop zero to the other earlier supplier, whether it is China or some other supplier, and we need to make sure that the switch is taking place. And also I mentioned about sartans. Sartans is one of the good growth engine to us, where we were strong only in one sartan, where our nitrosamine impurities are excellent compared to several other companies which had to close down. Now we have created capacity for the sartans. At least 3 sartans, the validations are going on, and we are geared up to take the volumes in the coming years. Then I mentioned about contrast media. That's another growth engine. This contrast media is in very, very important situation because there are not many people. There are only 2 in the world other than Divi. And iodine, what used to be $20, $25 is now $65 to $70. So how efficiently you can consume iodine, how you can recover, recycle with minimum loss, where we are excellent, that's the winning situation where we can get as much business possible in the contrast media. And I think you will see in the next 2-3 years a good improvement in contrast media with good numbers. Then we also mentioned as one of the growth engines that 2 large custom synthesis projects, they are progressing well. Qualification quantities already supplied. Commercial quantities will be starting in the next 1-2 years. Again, these are all long-term projects. They are not disappearing molecules. These are growing molecules. The future generics, where I said between 23 and 25 going out of patent, $20 billion. Again, we have the capacity, process are developed, samples supplied from the pilot plant, and validations under progress, and as and when patent expires, we are ready to supply. So we don't see any reason and that we will be having issues in the generic. No, yes, the custom synthesis opportunities, where we were in a unique situation in the anti-COVID drugs or others, gave us a boost. But that doesn't mean that we are not doing well in the generics. Yes, as a generics are in price pressures, and I think we will come out in the next few months to a year.
Thank you, Dr. Divi. Last question, I'll keep it very brief. If I were to look at when any company does, like a big pharma does an expedited capex with your announces it, let's take the case of Merck, where you did a 400 crore capex, I think a year before. Should we, once this opportunity goes away, how should we look at the turns on that capex? You said in the opening remarks about multi-purpose. Should that be how we should look at it, or do you think that is dedicated and it's once that opportunity goes away, that capex is not productive?
Good question. We never build plants or blocks dedicated to a product. We build always multi-purpose blocks. If the customer wants it, we can use that block only to make his product. But if customer says, I want only now, instead of 1,000 tons, 500 tons, we can use the remaining 50% of the time to make any other product, either generic or for any other custom synthesis project. If he says, I want only 30%, 300 tons, we can use it for the next 6, 7 or 8 months for any other product, because all these equipment are multi-purpose and can be switched within a matter of 30 to 45 days. The question is the regulatory bodies. What time it takes for the regulatories to get an approval for an additional molecule? They're the only one. Whereas we can switch and manufacture any other product. But one thing I want you to remember, any product, they won't die. What will happen is, instead of 100%, maybe they'll say 70%, 60%, 40%, that's our experience. And what seems to be less active or more active may become less active and more active. So the molecules behave differently while the pandemic is taking its own variations, bringing its own variations.
Thank you, Dr. V. All the best.
Thank you.
Thank you. The next question is from the line of Cinderella from JM Financial. Please go ahead.
Thanks for the opportunity. Dr. Divi, if we look at our inventory number at 2,800 crore for the full year, should this be considered as a visibility for next year's growth, or is there any raw material inventory built into it?
Could you please repeat the question again?
If we look at the 2,800 crore inventory number for the full year, am I audible, ma'am?
Yes,
am I audible?
Yes.
Yeah. So 2,800 crore number, if we look at the inventory number, should we consider this as a visibility for our growth in FY23? Or is there any inventory, risk that we should, consider when we are looking at this number? Because
no, the inventory is related to the actual products we are manufacturing, and there is no risk to the inventory at all. The reason probably the inventory looks whether it is average or medium or high, because the management takes decisions to stock enough product where we may have problems either with solvents or catalysts or some of the raw materials.
That's helpful, sir. So if we look at the overall scenario on the supply situation, on the entire logistical situation, do you think FY22 would have some of it impact, and if we can quantify the same?
I think it would have a similar impact as what it was last year, considering we have some other additional factors that are hitting the market. It could be the port situation that's happening currently, even with the Colombo port, along with the Shanghai port, or it could be the war that's happening, where the effect is seen slightly in Europe. So it is very difficult to quantify at this point of time, considering where the things are going to head and how they are going to move into. But also we need to see how the pandemic is going to play. Is it going to, because we're again listening to cases where it's increasing across the country and other nations. So it's quite difficult to quantify, but yes, we would be slightly conservative, and we would think that we need to operate at with stringent practices as we did this previous financial year.
Okay. Nirma, any risk to the 45% EBITDA margin level that you envisage immediately?
Pardon me? Can you repeat that?
Any risk to the EBITDA margin of 44% that you envisage immediately?
We don't see any risk on the EBITDA. I think this is where I always say bottom line, that's where we concentrate, not on the top line. The top line automatically happens as we introduce new products, new generics, and new custom synthesis opportunities. The bottom line depends on our efficiency and productivity because of our process development work. And it varies, but we try to maintain it that, what you said, 40%.
That's helpful. Dr. Divi, if I may, the last one. We've been talking about immense of opportunity for our custom synthesis business. There are a lot of products, as per your commentary, on the generic side of the business, which will commercialize. So is there any visibility that you can provide? I know I might be asking this question again, but any kind of a broad number that if we will be able to at least maintain the FY22 number and grow over it at the top line, if any sense that you could help us would be very helpful.
No, as I mentioned that we are in a peculiar situation. I used to project very well year on year, but I think with the current situation in the business, we would like to make sure that it's better not to project at least and wait and watch the pandemic situation, the war situation, the post-condition situation, and also the various molecules coming out, their efficiency situation. I think I'd rather not project.
Thank you so much, sir. That's very helpful.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Alankar from Kotak Institutional Equities. Please go ahead.
Hi, good afternoon, everyone. Sir, my question is on the contrast media segment. It's a pretty consolidated segment with high entry barriers. And you just now alluded to your cost competitiveness given higher iodine recovery, and you have, I think, alluded to that in the past as well. Can you elaborate on how has been the early progress in gaining market share in this highly competitive or rather pretty consolidated contrast media segment?
See, the contrast media segment is growing at the rate of 15-20% year on year. And you are talking about if there's a 4,000 tons of ipamidol, at 20%, you need another 800 tons of ipamidol. And companies are not geared up to expand immediately to that kind of volume in these unpredicted times. Yes, there are only 2 or 3 big players in this contrast media, if you take the major 5 products. But the opportunity is very high. Entry is difficult. We already entered. So, and we are seeing more and more. When iodine was $15 or $12, people did not mind without investing into heavy recoveries, the contrast media. Finally, when it goes as injectable to the end user, the contribution was very less. Today, the iodine at the $65 to $70 per kilogram, I think people need to make sure that they are conserved and recycled, recovered, and to the base. So this is where we are good at. We've already installed plants to recover and doing it, and we're doing it. So we are seeing good growth in this business.
Thank you, sir. So just one follow-up on this, because most of the key players in the market right now also control the end consumer channel. I mean, they also are present on the devices front. So to that extent, is that an additional entry barrier for someone like us who's not present into devices?
See, you also want to see the growth of it in every market. The people whom you are referring to, probably they are linking it to the equipment supplier, and the same thing is being generalized because people are looking at the price pressure. They are putting price pressure on the existing suppliers, and they finally understood that unless you bring down the price to X, we will not be able to sharpen the pencil in what we should be charging to the patient. It's coming to that. That is the contrast media plus whatever is the imaging cost of the equipment in the hospital, they totally package it to X number of rupees or X number of dollars. That is fixed. So if the contrast media price goes up, they cannot afford that. This is where the generic player now is having a role or requirement, and we are seeing the encouragement from the wholesalers and whoever are the companies that are coming to play the generic role.
Thank you, sir. And just a quick second question. Any possibility of getting into biologics anytime in the near future, or you would be ruling out that possibility altogether?
I think we mentioned again and again, we are not averse to biologics. We looked at long time ago, but we have looked at peptides. We are very strong in the peptide building blocks. We looked at oligonucleotides. We made all the building blocks, or even the sugar molecules. But we were not in the monoclonal antibodies, and we are not looking at that as an opportunity now, because there are good opportunities with the volumes we have built, with the multipurpose equipment we created. I think there is still enough opportunities in our field.
Sure, sir. Thank you and all the best.
Thank you. The next question is from the line of Damayanti from HSBC Securities. Please go ahead.
Hi, thank you for the opportunity. So my question is on generic pricing challenges you mentioned for your customers. So in current inflationary environment, where on one hand we are seeing higher raw material prices, and at the same time your customers are also getting squeezed on prices. So as a API supplier, do you have any scope to pass on cost of higher raw material prices to your customers?
Yes, in the long-term contracts, what we have with our even generic customers, there is a inbuilt mechanism for the compensation, but of course there is also 10, 15, 20% business. They just would like to see whatever is the best price they can get, they switch. So there, yes, there is competition and there will be price pressures. But again, they are short-lived. Tomorrow when the raw material price goes up by another 10%, they will be out of business. Whereas people know that whoever wants to be in the dosage forms, they want an assured supplier, reliable supplier, shipping on time. This is where we have a lot of credibility in the products we play. So we are seeing price pressures because of, as Nilima mentioned, on the transportation costs, energy costs, port congestion, the containers not being available, and all this is one thing. Second thing, what is the demand by the end user, that the patient? So with the pandemic, we have seen in the last 2-3 years that certain therapeutic segments, they did suffer. People did not use painkillers. People did not use not life-threatening therapies. People spent money on what is required to go through the pandemic. But now we are seeing again lifestyle medicine demand going up. So I think it will be positive in the next 1-2 years. We should be in line.
Okay, sure. So my second question is, you mentioned most of the capacity or all of the capacity which you build is multi-purpose, and then the products which we generally target have long shelf life. Maybe like COVID-related products might be exception. But just a clarity, are you still supplying molnupiravir API or Paxlovid API, or these have dried up?
First of all, we are bound by confidentiality agreement, both by the big pharma. Neither we can talk about the volumes, nor talk about the product. This product is so happened, the innovator announced are the two products in the anti-COVID. They announced that Divi is going to be one of the suppliers. We will supply as long as they need. Yes, we will manufacture as long as they need the anti-COVID products. I think I mentioned a while ago that it will never become zero.
Okay.
There will be manufacturing and there will be supplies. Is it going to be a 20% or is it 100% or 10%? But you are right. What I said was that the equipment where we made these anti-COVID drugs, or where we are making the anti-COVID drugs even now, are produced in multi-purpose equipment. And if the campaign doesn't need any more for 3 months, 6 months, we will immediately switch to another product, either for the big pharma or for our own generic. Equipment capacity will never be wasted.
Okay, sir. That's helpful. Thank you.
Thank you. The next question is from the line of Dharmal Shah from Merciless Investment Managers. Please go ahead.
Hi. Thank you for taking my questions. And most of the questions have been answered. I just have one question left on the tax rate. So if we see YOY, tax rate has come down to around 20% from 25 in FY21. So any specific reason for the same, sir?
The two new SEZs that we have been expanding has come in operational, so the majority of the tax benefit that we have seen is from there.
Okay, well, this is mainly because of the incremental sales from this two new SEZ units.
Yeah.
Okay. Thank you.
Thank you very much. I now hand the conference over to Mr. M. Satish Chaudhary for closing comments.
Thank you all for joining us today for the earnings call of Divi's Laboratories Limited. In case you need any further clarification, please reach out to our investor relations. Thank you.
Thank you very much. On behalf of Divi's Laboratories Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.